Good day, folks. My name is Nigel Chanakira. Welcome to the Zimbabwe Quoted Companies Survey for 2021, sponsored by Nedbank and anchored by the Zimbabwe Independent. We want to commence with an opening prayer, so let's bow our heads and pray. Father, we thank you for this day that you have made. We will rejoice and be glad in it. Father, we thank you for an opportunity that we have to select Zimbabwe's top quoted companies for the year 2021. May your Holy Spirit guide, guard, and govern us as we go through this process. In the unconquerable name of Jesus Christ, we pray. Amen. Fantastic. I'm looking forward to the show. See you shortly. Ladies and gentlemen, let's take a few minutes now to listen to the Chief Executive Officer of Alpha Media Holdings, Mr. Kenyas Mafukidze.
Ladies and gentlemen from all corners of the globe, thank you for joining us in this year's edition of the Zimbabwe Independent Quoted Companies Survey for 2021. This year's event is again proudly sponsored by Nedbank, our partnership with the Zimbabwe Independent newspaper. Incidentally, the Zimbabwe Independent is turning 25 years this year, a testimony to resilience and perseverance against all odds. And congratulations to Faith and the team for making this 25 years a reality. We celebrate this year under the theme Business, Innovation and Enterprise under Challenging Environment. This year, as you all know, we were challenged by COVID-19. But even with these challenges, we managed to prevail. We have lost jobs, we have lost colleagues, we have even lost tremendously in our GDP. But despite these challenges, I'm proud to announce that the Zimbabwe Stock Exchange, one of the oldest exchanges on the continent, has actually managed to give a real return to its investors. Not only has the exchange given a real return, that return has exceeded a lot of our partners in regional competition. So it is in the exchange that we find inspiration, it's in the exchange that we find excitement. And this achievement by the Zimbabwe Stock Exchange would not have been possible were it not for the winners that we are here to celebrate today. These winners have shown focus, these winners have shown tremendous staying power, these winners have demonstrated that you can prevail against all odds. So we are here today to celebrate these winners. But in these winners, we not only find achievement, but we also find hope and inspiration. And from their winnings and their actions, we derive strategies for winning tomorrow. So it is with all this that I thank you very much for coming through to be with us today. And I thank you for coming through so that we can celebrate these things together. Special thanks to our advertisers who continue to provide audience and readership for our titles. Special thanks to Nedbank who continue to be supportive and inspirational sponsors to this event. Special thanks to the Independent for staying the 25 years so that we can once again be celebrating today. And it is therefore with this that I welcome you to this event and ask that you celebrate with us, you take lessons, you sit back and you relax as we thank the Lord for yet another year of achievement and progress. God bless you, God bless our country, God bless the Zimbabwe Stock Exchange.
We will now give the floor to the Zimbabwe Stock Exchange Business Development Manager, Mr. Enimo Taruvinga.
Good day. My name is Enimo Taruvinga. I'm the head of business development for the Zimbabwe Stock Exchange. We are excited to be part and parcel of this year's Quoted Company Survey, which is proudly sponsored by the Zimbabwe Independent and Nedbank. We look back into 2020 and we see that this year's theme, which is business innovation and enterprise in a disrupted environment, clearly resonates with what transpired last year and what we are still facing this year. If you look back into 2020, I think that was the period when we had COVID at its peak, and that caused a lot of disruption for the business environment. We also look from the economic side of things. If you look back from March and July, we had the exchange rate fixed at about 25 to the USD, and we moved to the interbank, which agreeably has resulted in more stability. But there was a sudden movement from the 25 to above 60 within less than a month, and that was also a significant disruption. The stock exchange itself was suspended from trading for a month from the 28th of June until the 3rd of August last year. And that caused a lot of disquiet amongst our stakeholders. And we would want to thank our issuers who have stood with us despite these disruptions. The theme also talks about how you can survive in such an environment, what you need to do, what innovations you can take, what enterprise, what new ideas you need to come up with. As the stock exchange, what we did ourselves last year, despite all these challenges, is that we actually realized that diversification is important. And we launched quite a number of new ideas last year. Beginning in August, we actually launched Zimbabwe Receivables Marketplace, which is an invoice discounting trading marketplace. The role of ZRM is to enable us to provide working capital solutions to the SME sector, which currently we have not been able to provide a listing platform for. So in our own way, we thought providing working capital would ease the financing challenges that are faced by SMEs. In September, we then launched ZSE Direct, which is an online trading platform, and that really spoke to the convenience that we wanted to give to our retail investors. Retail investors had been part and parcel of the capital markets prior to dollarization in 2009, but we had seen that market actually moving away. We don't know whether the US dollar was difficult to invest or the conditions were challenging, but convenience definitely was an issue. And with ZSE Direct, now it's more comfortable for people to just log in from wherever they are and trade from the comfort of their homes. In October, we moved to the launch of the Victoria Falls Stock Exchange, which is an exchange meant to provide capital raising opportunities in hard currency for our productive sectors. We were not able to dollarize the stock exchange, but we thought establishing a clearly diversified separate exchange from the ZSE, wholly trading in USD, would serve the market better. We also had the listing of Citgo International on that market in the same month, which to us was quite commendable. In December of 2020, we had the first ETF being launched on the stock exchange by Old Mutual Investment Group. Quite an innovative product meant to save the retail market as well. An ETF in the country, homegrown, is really a first, especially if you look at the SADC markets. All the other markets have had to borrow ideas from other markets. We did borrow the ideas, but we managed to do it on our own using homegrown skills. Looking at the market performance as well, we note that the Zimbabwe Stock Exchange remained relevant in 2020, even up to this period. If you look at the indices, our market performance was quite phenomenal. We had more than 1,000% growth on the all-share index, which is the benchmark index. And that was far ahead of the annual inflation in 2020, which closed the year at 349%. So if you compare 1,000% growth on the overall market and annual inflation of 349%, that's more like 3 times cover in terms of inflation hedging. Even if you were to compare with the movement of the exchange rate, you'll find that in official US dollar terms, the growth is more than 350%. So the returns really spoke to the environment and made us to be a haven for preserving value. We also saw that liquidity was really high in 2020. We managed to get 17 billion worth of trades going through the exchange in 2020. And this trend has continued even in 2021. For the 5 months to May and for the few days that we have traded up to yesterday, we have seen turnover actually exceeding the amount that we achieved for the whole of last year. And that speaks to confidence on the quality of listings that we have on the exchange. We have also seen a significant contribution of ZSE Direct to this performance. We used to average 250 to 300 trades per day. We have seen ZSE Direct coming on board, and it has added another 100, on average 100 trades per day. And these are coming from the retail market, and we are quite happy that that product, ZSE Direct, has contributed towards that. The ETF that we also talked about has made quite a significant contribution to the exchange. We have seen the number of units listed rising from 80 million as of 4 January to more than 140 million as of this month. And that's a 75% growth in less than a year, the first year of its launch. Looking at the sectors that we are all celebrating today, which is the quoted companies themselves. Despite the challenges, we have seen all our companies really being innovative in how they approach the environment. One of the things that stand out from last year that we noticed from our corporates are mergers. We had 2 significant mergers occurring last year. One was the African Sun and Dawn, and the other one was the ZPI and ZHL merger. And this spoke to how they perceived in the environment and realized that perhaps being one unit is better in such an environment. We have even seen this trend continuing this year, beginning of this year. We saw Citgo International merging with Sidco Limited, which speaks to the realization that in an environment you don't need to remain static. It's more important to be proactive, take action, and ensure that you ride the waves that come along the way. We also saw, because of the COVID pandemic, most institutions adopting remote working, which was really, one, to try and minimize the spread of the virus itself, and secondly, also being a cost reduction in that now there was no need for provision of transport facilities for the employees to come to work, and also working from the office itself means that there's an additional expense that's incurred in terms of power that's going to be utilized, in terms of the telephone bill that may go up. But with the remote working, it's also meant that businesses could continue operating, services could continue being provided even when the offices were closed. We also noted during last year and early this year a move towards renewable energy. Because of the precarious power situation that sometimes we find ourselves in, having an alternative source of energy really is commendable. And as the stock exchange, we also commissioned our solar last year. We have seen bigger companies like Keynote, even Old Mutual, also moving to renewable energy, which speaks to innovation and being focused and being cognizant of the environment. Lastly, but not least, I just want to mention the challenges which we faced. We have already talked about the issue of the suspension of the exchange, but as a sector as well, we lost a number of listings last year, which pains us, but such is life. We lost Dawn through that merger. We also lost ZPI. We also lost Power Speed, which were listed on the stock exchange. We also lost Falgold. And partly it also speaks to the environment that it has been quite difficult. But as an exchange, we'll continue to soldier on. In terms of the outlook, we are really optimistic that the markets will continue to function and that the markets will continue to serve their purpose of providing adequate long-term capital raising solutions. We are looking forward to the listing of REITs as well this year. REITs are real estate investment trusts, and these have been made possible through the provisions of the Finance Act, ably done by our Ministry of Finance and Economic Development. It's a product which we think will bring liquidity to pension funds and will also be able to bring liquidity to the sector real estate, which traditionally is an illiquid asset. We also look forward to new listings on the Victoria Falls Stock Exchange. It's a new exchange, and we have been working hard to get new listings to that board. And we think we'll get a debt listing on that market. We are also working on a corporate to list on the exchange. So going forward, we're very optimistic. Even the IMF has given a thumbs up on the economy. They've recently revised the economic growth for the Zimbabwe from 2.9% to 3.9% on the back of a good agricultural performance, which we think will drive all the other sectors to really perform in 2021. So thank you. And once again, thank you to the sponsors. Have a good day.
What would an event like this be like if there was no entertainment? This is an opportunity for us to take a bit of a break and listen to one of the emerging fine modern jazz artists in Zimbabwe. Ladies and gentlemen, I give you Mwenje Matola. That's a name you ought to remember. Mwenje Matola. Over to you, Mwenje.
semvura inopise musadza somoto kusadza mongaza kuva pose ndine baba namai vangu ndakapiwa namwari hakuchina mumwe angaziva nzvimbo yenyumungo yoma nguwe umamalova mawami kalipiwa ngutiko hakeko munyumu ungatati tauya nezizwivira oyo ndiyani.
To help us celebrate this year's Quoted Companies Survey, allow me to introduce our keynote speaker in Mbare. Mbare is the founder and executive chairman of RiskFlow International. The company is operating out of Ireland, the United Kingdom, and South Africa. Dan's positive outlook, passionate pursuit of success, and relentless perseverance inspires and motivates his team through thick and thin. After cutting his teeth in the banking industry over a period of 10 years, Dan quickly progressed to senior level. Dan opted to go the entrepreneurial route and founded RiskFlow for more than 3 decades ago. In its first incarnation, RiskFlow focused on asset liability management and consulting to banks. His vision and innovative approach to solving prevailing problems in the banking industry resulted in the creation of products such as asset liability management optimization model, a 3D interest rate forecasting system, a multiple interest rate scenario and strategic funding mainframe system for banks in the early 80s, and the first treasury system to split front, middle, and back office functions in the mid-90s, which he launched in SEA. Thanks to his continuous reimagining of the RiskFlow offerings, the financial planning applications were converted to operate on mobile phones in 2012, and the company software solutions were recently transferred to the cloud through the creation of a digital platform. Dan holds a BCom law degree, an honors degree in economics, and a master's in business administration. He is also an FSCA registered key individual and representative, and is therefore qualified to give financial advice. Therefore, ladies and gentlemen, no one is better qualified to talk to us about surviving difficulties and managing disrupted and innovative environments better than Mbare. Ladies and gentlemen, Mbare.
Hi everyone, great to be here. Thank you for inviting me as your keynote speaker. In the first place, I would like to congratulate all the winners in their respective categories for their achievement, especially in a year where we all had to deal with the impact of the COVID-19 pandemic on our lives and on our businesses in one or another way. This is commendable. My focus will be on all those executives out there who has the power or influence and the vision to change the course of their businesses in an innovative and lasting way. I sincerely wish to convey an honest account of my business experience, including getting it wrong at times. There's nothing so exciting as to be in charge of a company that grows its performance on a year-on-year basis with double figures. In the mid-90s, I found myself in Southeast Asia, in charge of the banking division of a fintech group registered in the United States of America. I thought I was the golden boy of the group, starting from a low base and growing fast. We were preparing to list on the stock exchange in San Francisco. I was exposed to quarterly growth figures, and a bar always set higher and higher, like for a high jumper, until you can no longer meet the target without failing. My first learning to share with you regarding this is that every upswing contains the seed of its own destruction. We create monsters of companies that later cannot easily respond to change, disruption. Our own success contains the seed of our own destruction, which brings me to my second point. Tension, that is struggle and problems, seeks resolution. This is where innovation takes place. Take anything you can think of and apply enough tension force to it, and you will break it. How many executives have run their companies to the ground, not being able to respond in an orderly way? Energy follows the path of least resistance. In order to resolve tension, you need to take the path of least resistance. Robert Fritz, in his book on the path of least resistance, uses the example of the food paths created by cattle and other animals in the field, always following the easiest way to get from point A to B. The same happens when you pour water onto any type of surface. It will always flow in the direction of least resistance. The insights we can take from this are the following. Companies like to go through life taking the path of least resistance. They do not like to upset the apple cart, which led to the underlying structure of the company, which determines the path of least resistance. In order to create change, you will have to change the fundamental underlying structure of your company. A structure determines behavior. Fritz uses the analogy for creating anything based on the tradition of arts and sciences, which comprise of the following three ingredients: germination, assimilation, and completion, and how to make the most of each stage as you travel through it. Germination is the way you activate the seed of your creation by making choices about results you want to create. Think of planting seeds to create a tree. Assimilation is the process of taking in and fully understanding information or ideas, cultivating the process. Completion is to follow through the choices you made and how each kind of choice will affect your ability to create what you want. The importance of having a firm grip on both current reality and future vision, and how to focus the creative process to move from where you are to where you want to be. In our current context of a COVID pandemic, what better disruption could be asked for to instigate innovation beyond our imagination? It created the perfect storm to be resolved. It requires resolution, that is innovation, to create the new normal, as we already have seen many companies do, such as Netflix addressing the entertainment needs of people, retailers offering innovative delivery mechanisms for ensuring that products end up in their consumer hands, banking embracing digital solutions which see their branch network disappearing, Microsoft introducing the use of Teams to businesses and schools to address communication and teaching, just to mention a few. In order to be innovative, we only require two things to apply to our superconscious mind. First, we need a clear vision of what the end result should look like. And secondly, we need to be honest about the truth of our current reality. Then, wisdom will inevitably result. Be aware that our unconscious mind links to our beliefs, which will always create doubts about our ability to create a new end result. In the creative orientation, that's now innovation, you are guided by your superconscious truth, which is your current reality. I use the same concepts and principles to prevent my fintech company from falling prey and get suffocated in legacy systems, to reimagine a new era of operating in a digital and cloud-based world. My message to you is to seize the power. Do not give the power away by falling prey to your current circumstances. The power is your vision, what you love in the end result that you are visualizing. To achieve success, you have to follow through. Thank you.
Ladies and gentlemen, it's time to focus the attention on our sponsors, Nedbank. For 5 years, they've walked the journey with us at the Zimbabwe Independent, sponsoring the Zimbabwe Coated Companies Survey. And I want to hand the floor over now to Mr. Norman Gambiza.
Good day. Welcome to the 2021 Coated Company Survey edition. It is a special edition for us as Nedbankers and our HStvZim partners as Zimbabwe Independent. I think the background to this being special, I think it comes out of the COVID with headwinds that we have faced over the past 2 years. We have been amazed by the resilience and perseverance that has been shown by the coated companies and the business in the Zimbabwean economy at large. We need to applaud the torchbearers, the coated companies, the role that they have played in collaborating with the authorities in setting the pace that then became the standards of how the Zimbabwean environment was managed as far as COVID is concerned. We saw coated companies being on the forefront, collaborating with the authorities, coming up with models that when we look in retrospect, we realize they were good initiatives. You no doubt agree that when we started 2020, we thought COVID was an issue of the Far East, and the sooner we learned it was at home and the hard lockdown was upon us, we realized we were facing serious headwinds. We believe that the examples that were set up by particularly the coated companies and the other business enterprises became the model that the rest of the businesses followed. I think we realized that significantly all partners in the business sector, including the coated companies being on the forefront, they started pushing beyond their comfort zones. One, in terms of finding ways how they will continue with the business for the good and of the generality of the Zimbabwean population, and also just for the good and healthy of the population. Looking forward, I think we've set a base is the Zimbabwe model, a model that has really stretched, pushed beyond boundaries, and they've come up with solutions and potentially products that can compete aggressively, not just on the regional platform, but I think on the Pan-African, potentially global platform. In terms of value, why we got motivated to be associated with quoted companies. By nature, quoted companies, these are investments that are at scale, significant scale. At individual level, you will not dream about having to own a business that is quoted. It requires a deep pocket, it requires deep experience. But just by being listed and quoted, it gives the opportunity from all and sundry, from across the country, all corners of Zimbabwe, to just have the discipline to put dollars that can afford a stock, and you can realize your dream of participating in a project of national scale or significant size. I think one of the attributes that we applaud the quoted companies is the discipline as far as reporting is concerned. I think you have religiously demonstrated that you are transparent. The information that you give to the market is without any hindrance. And in the process, we think it is transformational, not just to the business, but even to our youngsters that are coming out of business schools. The reports that comes out of quoted companies are in a way a moving business school. And in our view, it creates a basis from which our future leaders, our future enterprises are created. But secondly, I think the contribution also that quoted companies demonstrate to the fiscals and our national government, it is transparent. They put everything on the table, and we believe all the infrastructure that we ride on as we go on our day-to-day lives is also coming from the support and the transparency that is achieved through the quoted companies. On the value to the Nedbank brand, we have no doubt that we have been invited to a lot of significant projects, economic projects in our environment. And not just because we're supporting the quoted company surveys, but because we have demonstrated willingness that has put our brand on the map, and there is no significant national project that we have not been invited to participate, either as funders or people that are going to contribute in terms of the idea generation and execution. And for that, we are grateful to the Quoted Companies Association. Going forward, we say what do we expect of the quoted companies? Our clarion call to the quoted companies is that if the leadership in the segment can just adopt the culture that they want to be the hub for the birth of innovators in our midst, not just in terms of getting those up within your institutions, but looking and identifying them right across the midst of the economy, and being supportive, giving them opportunities to come through, either for mentoring, either for taking up their products. And in the process, we believe that you can pride yourself of the future enterprises that are not only going to contribute to the national economy, but they will be the quoted companies of the future. If quoted companies are successful, I think it guarantees the perpetual existence, not just of us as your partners, but I think perpetual existence of a lot more businesses that are within the economy, that are dependent on big projects, that depend on scale, and that depends on the vision and experience that are resident in the quoted companies. I think as a parting shot, we'll say all the best to the companies that are going to win. This survey has always been on well-known criteria, so it is clear, and we believe that the top companies that have been judged by our HStvZim panel of judges, they deserve it, and they've got a lot to teach. And for the losers, definitely not all is lost. We believe going forward, you have got some pickings in terms of how you can enhance your business operations, in terms of how you can enhance your operational efficiencies. And if you can afford to improve on your operational efficiencies, we believe your solutions will be affordable, your efficiencies will command following, and you command volumes. And if you command volumes, which is the people, money always follow people. And when you've got the money, success is guaranteed. And that's for the greater prosperity of our country. To the winners, our warm congratulations and best luck for the remainder of the year 2021. To the losers, don't lose hope, work hard and learn from the best. From Nedbank, we say see money differently. Thank you.
Let's turn it over now to the investment analyst who was looking at the quoted companies along with others. And to represent them, we've got Mr. Respect Gwenzi, who is going to speak on behalf of all the analysts that looked at all our quoted companies. Over to you, Respect.
Welcome viewers to the 2021 Quoted Company Survey. My name is Respect Gwenzi and I'm representing Equity Axis. I lead a team of adjudicators to this year's publication. Before I get into my presentation, I just want to applaud Zimbabwean companies for their resilience in a 2020 period, which was a very tough year economically, and also the impact of COVID-19, which hit the world unexpectedly. I'll get to my presentation. My presentation layout will start with the ZSE structural analysis. We'll get on to the 2020 economic review and 2021 forecast. And then we get into the listed companies performance review and then the adjudication process. I'll start my presentation. So overall, we looked at the Zimbabwe Stock Exchange in terms of its structure, in terms of performance over the years. And we had quite some profound findings that we made. In terms of listings, in 1990, the stock market had about 57 listings, picking up in 2010 at 81 companies. And then from there, we started to see a slide to 56 companies as of 2020. So there was a significant decline in terms of listings between 2010 and 2020. What this shows is that generally the ZSE has not been as attractive for new listings on the bourse. But now we also extrapolated in terms of trying to look at other jurisdictions to see how the listings dynamics has also been faring. We realized that some of the biggest bourses in Africa have also been suffering the same fate. For example, the Johannesburg Stock Exchange, which is the largest in Africa, also saw a decline in terms of new listings between 2010 and 2020. And that number was almost 50%. If you look at the Nigeria Stock Exchange as well, there has been a sharp decline in terms of new listings, and also the listed companies the number of listed companies that trade on that respective exchange also declined between 2010 and 2020. But one phenomena which is quite clear across all these respective markets is that stock markets tend not to attract new listings or suffer delistings simply because their underlying economies are equally underperforming. So there were the challenges in terms of the economy in Nigeria. South Africa has been a bit resilient, but economic performance with that respective jurisdiction has also been coming off in the past, over the past 10 years. But there are some exciting notes from the stock markets in Zambia and also Malawi, where there has been a spontaneous growth in terms of new listings since those respective bourses were started. So one thing is quite clear. economies that are weak, economies that are underperforming, economies that are volatile attract less new listings, and also they suffer from delistings over time. And this has been the fate with the Zimbabwe Stock Exchange. In 2020 alone, we saw a sharp decline in terms of an increase in terms of delistings. You could talk of Dawn Properties consolidation with African Sun, ZPI's consolidation with ZHL, and Falgod's Falgod coming off the board as well. And right at the end of the year, Citco International also exited the local boss. So these dynamics or these developments reflect on largely the underlying economy and economic performance, which has not necessarily been positive to the extent that people can save and also invest, and companies find it value worth to list on the respective stock markets. The slides that I will also show reflect some of the dynamics around listings between different jurisdictions. There is the Nairobi Stock Exchange, which shows an increase in terms of listings between 1990 and 2020. For Botswana Stock Exchange, the gain has been quite significant between 1990 and 2020. For Lusaka, it started in 1994, but there is a growth as well. Nigeria Stock Exchange, overall, there has been a growth. For the Johannesburg Stock Exchange, there is a decline. So Zimbabwe and the Johannesburg Stock Exchange suffered these sharp declines in terms of listings between 1990 and 2020. What also reflects on that slide is market capitalization. Despite a fall on the JSE in terms of in terms of listings, or despite delistings, the stock market's overall market capitalization, which is the value of those listed companies, went up in that respective period, which shows that at least there was value that investors could step into. But for the ZSE, while 2020 reported significant gains, as we will see in the along the presentation, the growth has not been quite definitive and predictable over the past 10 years. The third slide I will show shows respective market caps. But one thing of note is that Zimbabwe used to be the 6th largest stock market among the emerging markets globally. That is in 1990. But right now it no longer features even in the top 5 of the sub-Saharan markets, which is just a subset of the overall emerging markets. It has been overtaken by the Nairobi Stock Exchange, the Ghana Stock Market, as well as the BSC, which is the Botswana Stock Exchange, in terms of market capitalization. Interestingly, as at December, that is over 2020, the stock market closed with a market capitalization of 6.4 billion. This was the biggest jump in terms of stock market gains over the past at least 10 years. But when you look at it from a 10 to 20 year analysis, you see that generally the ZSE has lagged the growth that we are also realizing in the region. This has largely been in line with the weak macroeconomic environment. Companies have also not posted as significant earnings as expected by the market. So valuations for companies have been impacted by equally a high country risk. So Zimbabwe has got a premium, which is a country risk premium that investors factor when they are valuing stocks. And this results in discounting of share prices. Further looking at the Zimbabwe Stock Exchange, when you look at the foreign dynamics in terms of foreign participation on the ZSE, it has not been as good over the past at least 5 years. And this also reflects adversely on the stock market. If you look at the foreign contribution to total turnover, it has come off from a high of 63% in 2014 to a low of 7% in 2020. What this shows is that foreign participation on the ZSE has indeed declined over the past 5 years. So for every dollar that is traded on the Zimbabwe Stock Exchange, only 7 cents is now coming from foreigners. Whereas in 2014, 63% of the 63 for every dollar used to come from foreigners. Further looking at the foreign participation trend on the ZSE, if you look at the net between what foreigners are putting in and what they're taking out, their foreign sales to foreign buys to foreign sales, there has been a net sell-off, which means foreigners are largely exiting the market. In 2020 alone, there is a 6.6 billion in terms of 663 million in terms of net outflows by foreigners. But when you look at it from a 5-year perspective, there is that trend which shows largely a net sell-off position. If we then also look at what's happening in terms of foreign direct investment, which is almost an equivalent measure of foreign interest on the local market, we realize that Zimbabwe lags the region in terms of attracting foreign direct investment. Over the past 10 years, the trend shows that our average is below 0.5 billion, which is about 500 million. What that reflects is that in terms of our attraction of foreign capital, we have not been better than Zambia and Mozambique, which are now averaging about 1 billion each per annum. So the macro volatility, unfriendly investor policies, and negative international perception are some of the factors that are weighing on the country's prospects to attract foreign direct investment, as well as to encourage foreign investments through the stock market. What is it that we can possibly take away from this? The stock market challenges, in our view, are both structural and endogenous. What this means is that there are some challenges that are created by ZSE's own structure, which is a function of policy, and other endogenous issues. When you look at aspects of economic growth and so forth, these are outside of the control of the ZSE. So both internal and external factors are contributing to this weak participation and weak growth of our local stock market. So going forward, policymakers should review investment policy and align with regional standards, that is around key aspects such as capital gains tax, which are quite high compared to the region. There's also a need to reconfigure the economy such that investors can retain their money or take back their money as and when they wish to exit the local market. In terms of the securities exchange, it should spare financial education, while the ZSE should also increase information dissemination and tap into an emerging generation of younger potential new investors onto the stock market. Now to look closely at the ZSE performance in 2020. The all-share index, which is the broader index on the Zimbabwe Stock Exchange, it gained 1,046% in nominal terms. In real terms, that growth was above 100%. And it emerged as the best performer in the sub-Saharan Africa, which is among all the stock markets in the region. But in the first half alone, the ZSE accumulated 665%, which was quite phenomenal. Why? Because at around 26th of June 2020, the government moved in to stop trading on the stock market. This was because of issues to do with the exchange rate. The government cited some of the speculative action that was happening on the stock market as driving especially the old mutual implied rate upwards. By the time government stopped trading, the old mutual implied rate was sitting at about 140. and this compared to an interbank rate which was at 25. So when you look at the variance between the old mutual implied rate at that respective time to the interbank rate, that variance was 600%. So it means there was a premium of 600% to the old mutual implied rate. Interestingly, when you look at the present day exchange rate, in terms of the black market, the range is almost closer to that old mutual implied rate that prevailed as of June of last year. We are currently seeing rates of about 130, which is closer to that old mutual implied rate that prevailed at the time the stock market was participation was stopped by government. So what the performance of the ZSE shows for 2020 is that investors were able to generate real value in a constant currency, and that gain was quite phenomenal. It came in at over 100% in USD terms. When you look at the market cap, it began the year at about 2.5 billion in US dollar terms, closing the year at about 3.9. So that growth is actually real growth, because this is after factoring the various exchange rates that are present in Zimbabwe. When you look at the top 10, which is the top 10 index, which captures the movement of the 10 biggest companies in Zim, there is a growth of 725% for 2020, which was also in line with the overall ZSE All-Share Index. These companies are your typical defensive counters, which most investors largely move into in periods of high volatility and macroeconomic uncertainty. Now to look at other key indicators there in terms of the ZSE performance. Overall, 57 companies recorded an upsurge in price. And these 57 counters exclusively demonstrate or show all the listed active counters that were present on the stock market in that respective year. So in essence, all the companies that are listed on the stock market gained in value in 2020. Out of those, we saw that at least 56 were up by more than 100%. So it means 56 out of the 57 active counters went up by a margin of at least 100% in nominal terms. Only one counter had a growth of less than 100%, and that's GetBucks, which added about 4% in 2020. There were two suspensions, which is Old Mutual and PPC, which were respectively suspended following government's directive for them to do so. They remain suspended, but there's indication that they might be brought back to the ZSE main board. There is the Victoria Falls Stock Exchange, which was introduced in October of 2020 over the 8 months that it has been in play. That is Sitco International. Sitco International is primarily listed on the Botswana Stock Exchange, and its parent then, which is Sitco Limited, was listed on the Zimbabwe Stock Exchange. It had to forego its listing on the Zimbabwe Stock Exchange and now falls under Sitco International, which has got a secondary listing on that respective bourse. There has not been significant trades on the VFX since its launch to date, and there hasn't been significant traction as well in terms of that respective market attracting new listings. Recently, government put in place some enticing measures, policy measures, trying to attract new listings to that respective bourse, where exporters, in terms of their incremental volumes produced, will have to retain 100% if they are listed on that respective market. So that is one form of incentives that those that are going to list on that respective market are going to enjoy. But to date, there has not been any company that has solidly made a bold move or announcement that they intend to move. Although there has been indication from some companies, especially miners that are based in other jurisdictions but with mining operations in Zim. But then when you look at the companies that government intended to rope in, which is your Old Mutual and PPC. These have flatly rejected the offer. Of course, it hasn't been highlighted in terms of in the press, but the move or the announcement that PPC and Old Mutual will be back on the ZSC main board reflects this dynamic. When you look at some of the takeaways in terms of the VFX, you also realize that it's too early to write it off. It normally takes 5 years to develop capital markets, and it's fair for us to give a fair evaluation on the prospects of this respective bourse at least year 5. However, our view is that this respective market will not attract any significant listings, substantial listings, unless there is a change in terms of fundamental direction the economy is taking. We are talking of economic growth that's quite sustainable and investment policies that attract new capital. So overall, the Zimbabwe Stock Exchange is the best performing exchange in Africa, and almost for the second year running, it still holds that position, which means that for investors that are looking at placing their money, the ZSC is a viable alternative to their investment, and there's real value that can be earned from investing on the stock market. But investors would need to carefully look at opportunities, especially in defensive companies with solid business models. But also from the company side, companies need to create higher standards in terms of governance and sustainability. These are some of the key things that investors are now looking at. Companies that are sustainable, companies that have got high corporate governance observance are receiving much attention from investors and are believed to have the ability to run over a longer duration. This is in order for them to attract new investors. Companies also need to explore new ways of engaging an emerging generation of potential investors. The way some companies globally are utilizing social media, are utilizing visual communication to reach out to especially a tech-savvy generation that is emerging, but also willing to take risk on capital markets. It's really imperative for companies to do so, because the more a company is publicized, the more the public gets to have interest in in buying shares of that respective company. Policymakers should ensure that there is economic stability, so as to allow companies or give companies the impetus to grow. You can only grow your business if the macro environment is stable. What we are seeing when GDP goes down is that companies are producing less, their profitability is also coming off, and as a result, their stock market valuations also tend to take that similar direction. So policymakers need to ensure that the macroeconomic environment is stable by putting in place policy measures that are friendly to business, that also promote economic growth. Now, to get into our economic review, the key variables of the economy have been showing signs of recovery. Looking at inflation, it has been easing in 2021 after peaking at 831% as at August 2020. Inflation started to track down on an annual basis. It is still on that respective trend. But in April of 2020, in May of 2020 specifically, monthly inflation started to rise for the first time after a solid 5 months of coming off. So that's a worrying statistic, because it reflects on the underlying drivers, which has generally been the exchange rate situation. So price stability has been inspired by exchange rate stability on the interbank. Most companies are now able to access money via the interbank, and that rate has been quite stable. And what this means is that importation of raw materials is done at stable prices. Companies can also plan, and production can also be ramped up, as stocks would be in in the right position. But now we also see SI 127, which came into effect a couple of weeks ago, as a potential, is having a potential to rattle markets and drive inflation up. There's already some dynamics where retailers are adjusting their prices in USD so as to cushion themselves from the implication of a local currency that may not give them a sufficient cover for their business and the risk that they would have taken. So this is likely to rattle markets up by increasing price levels in the economy. We have also seen the sustained increases in terms of pricings for some of the services that are rented by quasi government entities, such as the Zimbabwe Electricity Supplying Authority, and these have got a huge impact in terms of driving inflation up. When you also look at the global dynamic around oil, which accounts for the largest share of Zimbabwe's imports, there has been a gradual recovery in terms of oil prices following a slowdown in terms of global lockdowns. And this also has an implication of raising the country's cost of importation of fuel, and subsequently inflation would also come in. So overall, we see that there's sustained demand for USD, but this demand is emanating, in our view, from money supply growth, which threatens price stability. In terms of the key aspect of money supply, it would be reserve money. Reserve money is sitting currently at about 23.5 billion Zim dollars. At the beginning of the year, that figure was just about 18 billion dollars. So we have put up about $4 billion in new money in ZW terms. That is within the required or the targeted rate which the Monetary Policy Committee as well as the RBZ together with the RBZ set at the beginning of the year. It falls within that range, but we think that economic growth has been a bit slower compared to the rate that money supply is growing. So despite that rate going within government's expectations, we feel that the rate of growth in money supply far outpaces the rate of economic growth. But what is that rate of economic growth? So government had projected that the economy will grow by 7.5% in 2020. So the level at which money supply was supposed to grow would have been 20% per quarter. And now, if you are to put that same growth rate in terms of money supply or reserve money supply to an economic growth which we project will not go beyond 3%, it would require a reduction in the level of money supply growth. What is driving money supply growth in the economy? There are quite some observations around government's cost base. Lately, civil servants have been offered some salary adjustments that are staggered over some couple of months, and this obviously inflates government's cost base. We are also in the agric marketing season, and government is busy procuring maize for onward selling, of course, to producers. But what this would mean is that government's cost base would also equally inflate. And we also have got the importation of COVID-19 vaccines, which clearly was not as much, was not budgeted for sufficiently. So all these are cost push factors which would arise in government's cost base increasing ahead of the budget. And this would result in money supply growth as government tries to cover some of its own demands. So the exchange rate trend has been stable on the interbank, but there is a variance between the interbank and the parallel market rate, which continues to widen and threatening economic stability. So the current rate in terms of the interbank is at about 85, whereas the parallel rate is at about 130%. that premium is a 40% premium. So what would that mean? It would mean that if exporters are to cede their receipts to RBZ to the tune of 30 or 40%, their net earnings, when they compute their net earnings or net realizable value from the sales that they would have made, there is a loss of about 15%. So if the exchange rates were tallying, they could be recouping 100% of their value, but now they're recouping almost 85%. So this variance disincentivizes exportation of goods that are produced in Zimbabwe, because once you export, you are subjected to an import surrender. So this dynamic over the long term, over the mid-term, affects production in the economy. So you would tactically see companies slowing down in terms of their production levels. You would also see companies trying to do off-market deals in terms of selling their forex. And so there are quite some implications to the economy in terms of this variance between these two rates. And more critically, if you look at the structure of the economy, 65% of the economy is informalized. And what that means is that there is a high tendency of utilizing the parallel market rate as a proxy or as a measure of valuing one's goods if you are possibly a retailer. So you would expect prices to move in line with the dynamics on the parallel market rate. So this is clearly a time bomb, and obviously it has to be addressed in order for the current or the envisaged growth that Zimbabwe is projecting for 2021 to be realized. What is it in our view that we think can sustain momentum or can sustain economic recovery? Yes, Zimbabwe is going to grow or recover in 2021, but we think that fundamental pillars for growth include budgetary balance. Once the economy closes with a deficit of above 10%, we think that there is tendencies for government to increase money supply, which subsequently can destabilize the exchange rate. So once you have a budgetary balance, which of course we did achieve in 2020, in 2021 it's likely that we may have a deficit upwards of 10%. And once this happens, there is a serious risk for government to print money and therefore cause exchange rate instability. We also think that one key element is external trade, the external trade position, but more critically is the balance of payments, whose biggest component is the external trade. To date, there has been a huge increase in terms of our imports. Of course, exports have also gone up, but we think that there is pressure in terms of importation in 2021, medicaments for COVID-19 and crude oil recovery, price recovery. This could result in a growth in terms of the budget, the external trade balance. And so once these pillars are stable, we think that the economy can now charter a sustainable path to recovery. But in order to achieve a budgetary balance, you don't only need to balance your books. You need to look at the fundamental aspects of increasing the margin of your surplus. This means structural reforms in government, structural reforms in quasi-fiscal entities, and this restructuring is long overdue. It has been highlighted in the TSP, and it should now be implemented for Zimbabwe to position itself for a sustained growth. We also believe that another key pillar there is governance, where political economic reforms are quite paramount for the economy to reconfigure. What is our outlook? We expect a rebound in 2021 after 2 years of recession, but we think that this rebound will be mild given some structural challenges that the economy faces, And these are issues to do with reformation of quasi-entities, reformation of ministries, and so forth. This would position the economy on a different trajectory. What are the key drivers for our expected growth in terms of the economy? Better rainfall in 2020 to 2021 season, higher commodity prices, relative economic stability, which would spur production growth, and better earnings from the tobacco sector as well as the real sector. But the downside risks, as a highlighted area, are that money supply growth is worrying and is beyond the economic growth that we are currently seeing. Currency market inefficiencies, the wider variances between the two rates, as highlighted area. COVID-19, the rate at which the economy or the government will implement vaccinations also affects the kind of economic recovery that we can realize in 2021. Right now we are sitting at about 2.4% in terms of our vaccinations against the total population. And to achieve herd immunity, we should move closer to 50–60%. And so we still have got a long way to go. And that means there's high risk of infections, high risk of deaths, and so forth. So for us to move forward, we would need to increase the rate at which vaccinations are taking place in order for business to come back full throttle. We also see that as a risk to the projected growth, there is already an election momentum which is building up, and election spend has started to kick in. Some of the decisions that government would take would be quite impulsive based on the objective of trying to secure an election win. So obviously this tends to destabilize the kind of macroeconomic projections that we would have made. Looking at the listed companies in terms of their performance in 2020, these are some of the key observations that we made around listed companies. In terms of volumes, there continues to be a volumes decline. That is for the 2020 financial year, 67% of the companies had a negative volumes growth in that respective year. From the second half onwards, there has been an improved performance by companies in terms of volumes, but when you then factor in the first half of the year, it shows that there has been a net negative generally for the market. Revenue losses still continue, but when you look at it in inflation adjusted terms, the results are worse off compared to those that arise when you use the historical. This is basically a technical implication, but generally there has been revenue losses recording as well as the operating profit loss positions as well. Companies are still realizing fair value adjustment profits, exchange gains profits, and cash flow generation has largely been adverse. One of the key highlights for 2020 is that most companies failed to prepare their financials on time due to lockdowns and some challenges that auditors faced in terms of undertaking their duties to prepare those accounts. As a consequence, we then got to analyze only those companies that had fully presented their results to the market, and this makes up a significant fraction of the total of the total listed companies. So this analysis is based on companies that were able to release their results by the 5th of June 2021. To move forward, in terms of our adjudication process, we applied a Piotrowski F-score, that is to grade and also award the best performing listed companies based on their 2020 financial performance. So for the overall winners, we applied the Petrosky F-score, which we factor on the financials to come up with the best performers. Quite some interesting dynamics there, or things that we noted across listed companies' performances. We also have a sustainability award, which is based on the 3 tenets of sustainability, which are your environmental, social, and governance matters. So we used some matrices that are applied to the ESG matrix to come up with a sustainability award. We also have an innovation award, which tends to award companies and recognize companies that would have done exceptionally well in terms of introducing technology-driven products that disrupt the market and help drive earnings in ways that were not realized in the past. So these are our key categories, and I would like to congratulate all the winners for this year's event. And I wish all companies the best of luck in the 2021 financial year. And thank you to all our viewers.
Let's turn it back over to our entertainer, modern jazz artists. Once again, Mwenje Matola, take it away.
Ladies and gentlemen, welcome to the Quoted Companies 2021 Awards segment. For the Sustainability Award, As part of its sustainability initiatives, this company's business model entails the uptake of sugarcane from onward processing from outgrowers. The model is a deliberate approach where outgrowers are provided with financing and expertise in the production of their crop. Some of the land utilized by outgrowers has also been extended by this company. The town of Chiredzi has largely been dependent on the economic value of this company and its associates. The second runner-up for the Sustainability Award is Hippo Valley Estates Limited. This company is the leading mobile network operator in Zimbabwe. Over the years, the company has expanded its service offering to technology services, leveraging its expand's digital footprint and investment in robust systems. In 2018, the company unbundled its groundbreaking mobile money business together with its digital banking unit, among other technological-driven units. The company, together with its parent, has entered into innovative power-generating initiatives. The green solutions are eco-friendly and sustainable. In 2019, it was announced that the company will power its Masasa head office in Harare with self-generated solar power as it rolled out a renewable energy product for onward selling. The company is recognized for leadership in sustainable business practices, which includes a social investment and renewable energy. The first runner-up for the Sustainability Award is Econet Wireless Zimbabwe Limited. From being a small unit within the Insco Group to unbundling a solo fruitful run, the company has emerged as a force to reckon with among listed companies. The company's earnings have not only swelled phenomenally over the years, but these have been put to good use too. The company has over the years attended to sustainability issues, particularly environmental concerns. The company has invested its own funds in the generation of solar power at its Kariba home, and this investment will also bring about cost savings in the future. A number of listed companies have undertaken this route, but at varying degrees. Investors are increasing their focus on sustainability, which spans across corporate governance, environmental, and social issues. Ladies and gentlemen, the 2021 Award for the Sustainability. Ladies and gentlemen, the 2021 Sustainability Award goes to Padenga Holdings Limited. For the Innovation and Technology Awards, Zimbabwe banks have continuously been digitizing over the last 5 years, but at varying degrees. These maneuvers are in line with the improving banking technology, changing customer tastes, and supplementary mobile network investments to support the banking services. This bank has been at the forefront of the revolution and undertook to pursue a digitization strategy which is now nearing completion. A separate department specifically created for the purpose of redesigning the bank towards digital was created. 2 years on, the bank began to implement some of the technological changes to its core banking system and complementary processes. Bank rationalization is already proving to be a cost saver, while the migration of processes to digital has increased efficiency and customer satisfaction. This bank is awarded for the total transformation and the notable gains it has accrued since undertaking the initiative. The second runner-up for the Innovation and Technology Award is FBC Holdings. This Company is one of the only two listed logistics businesses on the Zimbabwe Stock Exchange. The company has withstood the pressure of challenging economic times through shareholder value preservation. For the 2021 Quoted Company Survey, the company is recognized for its innovation in logistics systems, which have allowed it to suppress costs and stay on top of its game in its respective area of specialization. The company recently invested in technology-driven solutions. The first runner-up for the Innovation Award is Unifreight Africa Limited. COVID-19 has brought to the fore the need for increased operational innovations. Some companies have taken lead leveraging on technology, while others have folded as viability fades. This company, a Pan-African quick-service restaurant operator with roots in Zimbabwe, has led a very successful campaign in its respective area of specialization in Kenya. Its delivery business, Kutuma Kenya Limited, performed well in the period under review, with rapid growth being noted. In the period under review, the business registering a 48% increase in revenue between first quarter and second quarter for year 2021. Delivery sales in Kenya increased by 31%, while the business contribution to revenue swelled to 20% from 14%. The 2021 Quoted Companies Survey Innovation and Technology Award winner is Simbisa Brands Limited. For the Corporate Leader of the Year, he is a corporate guru in Zimbabwe. He sits on several boards of directors on several listed companies in Zimbabwe. Over the years, he has led a number of corporate boards, including retailer Edgar's and Hippo Valley Estates, which produces sugar. He is recognized for his role at Delta Corporation, a leading beverages producer in Zimbabwe. Delta is the biggest company on the Zimbabwe Stock Exchange by market capitalization and remains a darling of investors. The company has strong fundamentals and over the years has been led by strong management teams with able board guidance. He has overseen the comeback of Delta after a challenging period between 2018 and 2020. The company faced volumes plunge emanating from both supply and demand issues. These factors were largely driven by the economic situation in Zimbabwe. In recent quarterly periods, Delta has reported improved numbers attesting to working management strategies. The runner-up for the Quoted Companies Survey Corporate Leader Award is Kanan Dube. He is an accomplished corporate leader with 31 years in frontier and emerging markets. He is recognized as the inaugural Corporate Leader of the Year for listed companies for his efforts in turning around CBZH. The bank has historically made profits, but not at par with the relative size of its assets. With the change in shareholder structure, he came in as board chairperson and led a massive restructuring exercise. He scouted for Zimbabwe's best talent across the world, relieved underperforming managers, and helped inspire a new culture at the bank. The bank's 2021 financials reflect early fruits of these changes. The bank's earnings are now spread wider, with the risk of non-performing loans further diminished. The winner of the inaugural Corporate Leader of the Year is Mark Holtzman. For the Quoted Companies Survey Overall Top Performers Award, volumes recovery in a volatile macroeconomic environment positions this company among the best performers in the year under review. The company performed well across all its business units except one. The downside of COVID-19 weighed on its paper division as in-class lessons were suspended. However, investment in latest battery technology ensured that the company maintained market leadership and thus drove sales both locally and regionally. The second runner-up of the Quoted Companies Survey overall top performers categories is Amalgamated Regional Trading. Since its unbundling from Masimba in 2015, this company has become nimble and focused, which over the years has allowed it to exploit opportunities in its space both locally and regionally. The installation of a PVC 9-line plant in the year under review, however, proved to be the game changer. The company's production capacity is set to increase to 70%, while production is projected to double. In the year under review, both sales production and sales volumes rose by a double-digit margin, largely driven by the contribution of the new plant. The company also enjoys regional diversification and thus cushioned from the macro dynamics in the core market of Zimbabwe. The company's exports grew in 2020, having also gone up in the prior year. Quoted Companies Survey overall top performers first runner-up is Proplastics Limited. The winner as the sole manufacturer of electricity cable in Zimbabwe. The company enjoys a near monopoly in its respective space. However, the proliferation of grey cheap imports, high customer risk concentration, and a generally subdued economic growth in Zimbabwe over the last 2 years has posed risks to the company's growth prospects over the last 2 years. The company has leveraged its geographical spread to mitigate the risk of economic downturn and cushion sales. A surge in exports helped drive the company's performance in a year where most listed companies suffered volume losses. Crystal Forex earnings have also helped in the sourcing of import inputs and sustainable stocking levels. The company's net earnings grew notably in real terms in the period under review, catapulting it to a prime position among its peers. The overall winner of this year's prestigious Quoted Companies Survey is Kafka Limited.
Wow! Let me express my personal hearty congratulations to the Zimbabwe Independent Quoted Companies Survey for 2021. Congratulations, Makorokoto Amhlope. Well done to you all, our winners. Ladies and gentlemen, time to turn it over to the editor of the Zimbabwe Independent, Faith Zaba.
Pleasant day. My name is Faith Zaba. I'm the editor of the Zimbabwe Independent. Allow me to extend my gratitude to Nedbank Zimbabwe, its managing director Sibo, and the entire Nedbank team for breathing life into this prestigious corporate event. We acknowledge the bank sponsorship, now running into more than half a decade, and we look forward to the continued partnership. The Quoted Companies Survey, which includes awards and a magazine, was introduced in 1998 and is now the country's most recognized event in the corporate space. This year's event is much more special as it comes at a time when the Zimbabwe Independent is celebrating a major milestone. 25 years of existence, 25 years of providing balanced, objective, and fair reportage of issues, and 25 years of being a professional, credible, reliable, trustworthy, and dependable media outlet. 25 years on, we continue to abide by the journalistic standards and ethics upon which the Zim Indo was founded, which include the principles of truthfulness, accuracy, objectivity, impartiality, fairness, and accountability. The Zimbabwe Independent holds the 24th Quoted Companies Survey under the theme Business Innovation and Enterprise in a Disrupted Environment. This year's theme echoes the turbulence that the economy and capital markets have gone through. The impact of COVID-19 was felt at all levels: business, social, and personal. The COVID-19 pandemic led to company closures and job losses, not only in Zimbabwe, but globally. But what it has done is to push companies to stretch beyond their limits through adaptive and innovative business models. As the Zimbabwe Independent, we recognize that research and objective analysis of financial performance is best conducted by independent researchers. This year, we once again partnered Equity Access, a recognized player in the financial research space, as analysts and adjudicators to the survey. On behalf of the Zimbabwe Independent and Alpha Media Holdings, I would like to congratulate Kafka for coming out as the best performer among listed companies. This year's survey is once again being held when most companies are battling to stay afloat amid a challenging economic environment worsened by the COVID-19 pandemic, which has infected around 40,000 people and killed over 1,600 people. As we hold this most prestigious business event on the calendar, we celebrate growth and the fortitude of companies operating in this turbulent period. Each year, the Zimbabwe Independent and Alpha Media Holdings are excited to host this business event. Zimbabwean companies need to be commended for continuing to defy all the odds and scaling up higher despite economic turbulence. We salute all the companies on the Zimbabwe Stock Exchange and all Zimbabwean companies, small to large enterprises. To the winning companies, I would like to recognize and salute your commitment to the economy. Through this, you have also become inspirational to other corporates as testimony that perseverance, innovation, and creativity are the pillars of sustainable business. In recognizing that strong and effective corporate governance helps to cultivate a company culture of integrity, leading to positive performance and an overall sustainable business, we introduced this new category. I would want to congratulate the Chairperson of the Year, Mr. Holtzman of CBZ Holdings. To all the winners, thank you for your contribution to the economy and thank you for giving us hope. As Zimbabwe Independent, we will continue to cheer you on, do our part to provide the view from the front row seat to history. We will continue to stimulate citizen engagement and debate. We will continue to promote accountability and integrity in all sectors to achieve good governance. We believe that it is only through robust engagement that as Zimbabweans we build the nation that we all want, a nation that we yearn for. Thank you.
Kamwenje kangu doda kapfute kamwenje kangu doda kapfute kamwenje kangu doda kapfute 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 kapfute